been a tough start to 2022 as inflation, rising interest rates and geopolitical conflict weigh on investor sentiment. There's been few places to hide, with equity and bond markets both pulled lower. New Zealand's gross top 50 index fell 17% in the year to June, with solid earnings results doing little to lift investors' spirits. The Australian top 200 index is held up compared with other global markets. It lost 12.5% of its value in the first half, with its numerous energy and mining stocks providing some cushioning. Energy has been the only consistent outperformer on markets this year. Despite investors' growing environmental concerns, the world is scrambling for oil supply as demand increases with economies coming out of COVID and sanctions on Russian oil imports following the Ukraine conflict. If there was an award for the most affected sector, it's got to be technology. The tech-heavy Nasdaq fell 27% in the year to June, with the FANG stocks leading the losses. Streaming service icon Netflix has lost 70% of its value in just 6 months as it sheds subscribers. Apple has lost its most valuable company status, aptly overtaken by the Saudi oil giant Aramco. Soft commodities have become a hot topic, with commentary suggesting supply fears could trigger a global food shortage. With Russian and Ukrainian wheat about a quarter of the world's exports out of the picture, the price of wheat futures surged by as much as 68% during the half. Underlying all of this has been surging inflation. The UK recorded an inflation rate of more than 9% in the year to June. The US wasn't far behind, with an 8.6% print, a level not seen for 40 years. New Zealand is trailing with a near 7% rate, much higher than Australia's 5%. They're all well above central banks' target ranges, seeing them increase interest rates in response. That's adding to pricing pressure on households around the world. Recession fears are rising. New Zealand's economic growth contracted in the first 3 months of this year. It's not all bad. While global equities have largely lost the strong gains made last year, they're still trading at pre-pandemic levels. But markets look to the future. The big questions for equity markets globally now is when will inflation peak and the impact slowing economies could have on company earnings.